All right, thank you, Tracy. Hello, everybody. This is Mike Taylor. As Tracy mentioned, we're going to be doing the inventory audit report to balance sheet matching and troubleshooting today. So I wanted to start with an agenda, just talking about what is the exact issue. We'll talk about what causes the issue. We'll do a demo in SAP about how to detect it, and then we'll have a chat about how to fix it with some Q&A at the end if you still have any questions. So what is the issue? Why would the inventory audit report be not matching to the balance sheet? So I mean, the big issue here is typically, you're closing a financial period and an auditor or an accountant wants to see a breakout of your inventory GL accounts into a SKU and quantity list, right? So they want to see, you have $1 million in inventory, what is that inventory and how do you break it down, SKU and moving average cost or FIFO or however you're doing your costing. So you go to run your reports, and when you run your reports, you want to run two reports, right? The balance sheet, that's one thing, and then you need to expand on that balance sheet. You're going to use the inventory audit report. The inventory audit report, you run it, it's pretty complicated, sometimes it takes some time. You're confident that you've run it correctly, but it doesn't match your balance sheet balance. And you're kind of stuck there because you need to provide matching balances, and accounting wants to be able to match everything, and this is totally understandable, but that's why we're here talking about it. So what causes the issue? Basically, unlike accounts receivable, accounts payable, which are true control accounts, SAP does not force your inventory accounts to be control accounts. I wish, frankly, there was a way to force it. There's no way to force it to be that way. So a couple of things will cause the inventory audit report to be off from the balance sheet. So the inventory audit report is a true checks and balances indication of the actual movements of inventory in your system. It is what your GL account balance should be. So the balance sheet can be off in a few different ways, and the three primary ways I've observed are a journal entry manually to an inventory account. So you've set, you got some adjustments back from the auditor or accountant, and they say, oh, you need to just write down your inventory, and you're like, okay, I'm just going to write it down. But if you write it down, with no concept of telling what SAP needs to write down in terms of SKUs, SAP is now just saying, we don't know what you did. We don't know what SKUs you affected. The second one that's common is incorrect GL account determinations. So you can do an incorrect GL account determinations, and I'll demonstrate that later. You could have something, you just kind of took a guess and put an inventory account in your inventory GL account determination, and it's now starting to cause balances that SAP does not consider to be inventory balance adjustments will now start appearing in your GLs for your inventory. So one of the common things is like a goods issue. So you're doing your goods issue, and you're like, oh, I want to credit inventory audit or the goods issue. I want to credit the inventory balance in the GL account. But the problem is that's not how you do it. When you do a goods issue, it's already going to affect your inventory audit, your inventory accounts, and you need to write it off to a COGS account. Anyway, so GL account determination is the second one. The third one that I commonly see is a service type AP invoice where somebody's said, oh, I bought like $1,000 worth of bolts, and I'm just going to throw that into, into an inventory, but I don't do it by SKU because I did it by service type. So that's another one that you cannot do it that way. If you buy something like inventory type through an AP service type invoice, it is a consumable by definition. You need to put it, it could be a fixed asset or something like that, but it can't be considered standard inventory because it will never be issued out. SAP does not associate that with a SKU. And the concept behind this balance sheet matching the inventory audit report is if you issue all of the items out of your system, your GL account should be 0, right? Okay, so let's jump into the system and look at how we detect this. So I'm going to exit out of here. We have our SAP system here with our B1 Up dashboards. These are slightly custom. What I like to do is I make this inventory tracking sheet. This is extremely simple. All I do is just put the months there. I put the balance sheet balance and the inventory audit, and then I just do like a delta, you know, these two fields minus each other just to give a difference there. I put a little notes column. In this case, to save time in this webinar, I did all these dates, and we're going to run the balance sheet and we're going to run the audit report in order to get the last 2 months there for December and November. So first thing you do, I have these set to shortcuts, so I can push F2 and then F3, but I'll show you where these live. The balance sheet, modules, financials, financial reports, financial, balance sheet, that'll bring up this guy. Inventory audit report, modules, inventory, inventory reports, inventory audit report. So that's where you get to them. So how do you run them? Run it by the posting date. I'm just going to do this to 12/31. I'm going to compare it at the end of the year, assuming this is the end of the year, just for the sake of simplicity. Push OK. Scroll down. I have one inventory account here. So this is what financially in our chart of accounts we're looking at. So this is you know, the issue here, and we need to compare it to what SAP thinks or knows from all your values and balances by SKU what it should be. So I'm going to put in the same end date. You don't have to put a start date if you don't want. This is critical though, this posting date. Drop down by default. If it's the first time you've run it, it's going to go system date. You don't want system date. System date means it's going to take the creation date of the inventory transactions. So if you made it today, but you backdated it to October 31st, it's going to consider it today. You don't want that. I don't know why system date is default, but that's a huge one that screws people up. So if you do that, and maybe your GL accounts do match your inventory audit report, this is still going to screw it up because, again, posting timing. Switch it to posting date, match it with the period that you want to check. If you were checking between 2 months, then you would put the 2 months there. In this case, it's pretty easy. Just put the end date. So we're going to do December here. You know, if you want to check a specific GL account by SKU, you can use that. But for right now, I'm just going to check all the locations, summarize by accounts, and I want to display OB for items, accounts with no transactions. Just, I don't have a start date, but it's just good to understand what this does. So say you filtered only for December. If you filter for December, but you don't check this box, if an item doesn't actually have a transaction in that month, it won't show its balance even if it has a balance. So you need to check this box when doing this to have it properly work. Okay, so I'm going to push that. Okay. May take several minutes, depends on the volume of transactions. This demo system is pretty easy. 103, 1000, same account. So I'm going to take this one, right click copy, go back to my sheet, paste it here, then I'm going to go back and I'm going to right click copy. You can see all the transactions here if you drill down. In this case, I'm only really worried about the balances. So I'm going to go here. And you know, what do you find? Geez, you're going to have $20,000 off. So let's check November 2, and we can just make sure the timing of when this was set off. So let's go back. This blue button goes back to the selection criteria. So I'm going to go 11:30, run it. I'm going to go 11:30, run this guy, confirm the warning, scroll down, right click, and I just run through this again. It doesn't take very long. It's just kind of repetitive. Right click here. I have a query somewhere that does a couple comparisons, but for now we're just doing it manually. So what does this show you, and why do I do it this way? So when I start out like this, I don't know how long you've been misaligned. So what I'll normally do is I'll start year by year and I'll just say, give me the end of 2018 and I'll do 2018, 2018. It matches, okay, good. I'll go 2019, go to the end of 2019. If the end of 2019 matches, that's great, but that's probably not why you're here. So if you go to 2018 matches, perfect. 2019 doesn't, you're narrowing it down within the 2019 year. So then I'll usually go, you can go half years. So you can say, was this, half the year matching? Yes. Okay, the second half of the year, then you're gonna, get closer and closer. So then you go, okay, it wasn't July, it wasn't August, it wasn't September, it wasn't October, started in November. Okay, that gives us a window of a time period where we're gonna look at the transactions. And if you have tons and tons of transactions, I will go week by week and day by day. Like I'll do a half month. Does it match? Does it not match? Then I'll go down to the week. And then depending on the volume of transactions, I mean, some people have unbelievable amounts of transactions, thousands per day. We can't check every single one. We need to narrow it down realistically just to a single day and then check it. The less volume you have, the easier it is, right? So if a month is granular enough, that's great. But again, this orients you to where the issue began and allows you to go straight through there. So chances are it started in November and it ended in November because it is off by the same amount and it's a very nice rounded number. If you see numbers going up and numbers going down and numbers going up and you're just like, oh no, pulling your hair out, likely it's going to be issue number 2, which is a GL account determination error. And a lot of those GL account determination errors are on credits. So you might have done some credits in one month, some credits in another month, some credits in a later month. Okay, so we'll address the fix for that after, but the easiest way to check this 20K is first I'll just pop open the journal entry, or sorry, the GL account. I'll go to the general ledger view, so modules, financials. I'm just going to assume everybody's somewhat familiar with the financial module. Financials, chart of accounts, click your inventory account. Again, this is quite simplified. Sometimes, like most people are going to have more than one inventory account. In this case, it's a little simpler. I'm going to click the balance, and I'm going to first double click on origin. And then I can skim down, delivery, invoice. Okay, look, I have one here, journal entry. The rule of thumb is you cannot journalize to a journal or to a GL account that is linked to inventory transactions. So obviously, because this is a webinar, I just added this here to mess up the inventory audit report. And you'll see here what they've added in the later version. I think 9.2 added it, was you can actually block manual posting to prevent people from doing that. So you can see here it's got a green highlight. That means it's linked to an inventory account. You do not want anybody posting to this manually for any reason, unless you're going to be doing a fix and adjusting it. Okay, so basically this is extremely simplified. I just unfiltered everything. I sorted the entire general ledger by journal entry. This is not necessarily realistic for the amount of volume of transactions you're going to have. So what you're going to want to do is filter for that date range. So I know it's it's November 1st and November 30th. It's somewhere in there. Check that. And luckily, because this is a demo system, I only have that one single journal entry there. So with that one single journal entry, it's pretty straightforward. You can just right-click, cancel it, and reverse it. Chances are it's not going to be that simple. And what we normally end up doing is, and I've seen this be approved with auditors and accountants, is just reclassify the difference into an inventory B account that is not listed in the item groups as being a GL determined account. So you can see this one's green, this one's not. So as far as I've seen, most accountants, most auditors are totally fine as long as it's in the same bucket, let's say, You still will be able to break out your inventory by SKU and cost, but any random adjustments they're making, you can just throw it into the inventory B account by reclassifying it on the same day. So just pop open a journal entry, credit debit your inventory account, and then whatever it's credit or debit to inventory B. And that's a very simple way to realign it and make sure you get your dates correct. And that should put it back into realignment. Okay, so that is best case scenario if you have only a couple transactions. The alternative is this is all whack and you need to fix it and you don't really know what's going on. So what you want to do is try and identify the journal entries to explain what's happening. But what I would do next is go ahead and look at your inventory GL account determinations from any item master data or typical master data. This can get really complicated, but typically looking at any master data will give you kind of a concept. Under the inventory data, you're going to see how the system is setting GL accounts. So this is either going to be typically warehouse or item group. Generally, it's going to be item group. I'd say 80% of the time it's item group, maybe 20, I don't know, 19% of the time it's going to be warehouse, and 1% of the time it'll be item level, like very, very rarely. Maybe even less than that. Mostly item group. So if your GL accounts are set by item group, you can start to look through your item group GL account determination by clicking this golden arrow here. So the rule of thumb here in the accounting tab is only these two accounts should ever have an inventory defined account, and they need to be the same account. If you see inventory in any other account, you have done this incorrectly. I have a GL account determination guide. If you want it, it will tell you what each of these determinations does, and it'll give you the classification that it typically would expect it to be, whether that's a COGS, an expense, or something else. But the only ones you want for inventory are inventory account, obviously, and sales return, which is where it's going to put any returns of physical products back into inventory. You can use the scrolling of the next record. You can use hold control on your keyboard and push the left and right arrow. You can see this is incrementing. And you just want to make sure you do not see any inventory in anywhere else other than those particular two. If you have any in those any inventory defined in any of the other GL account determinations, you are going to be incorrect, and it's going to periodically or constantly be adjusting your GL account incorrectly and causing your balance sheet to be off. So if you can't identify something that's as clear as this, you would then go and take kind of just the scorched earth approach, forget about the individual adjustments, look at your values in December, and just realign. Well, firstly, fix your GL account determinations immediately. Just remember, do not change the inventory account if there's value, but usually it's going to be other ones. It's going to be less important ones. Maybe I see in like sales credit, sometimes people have it there. That's the dollar value for revenue reversal, etc. So usually you can change those. Remember, don't change the primary inventory accounts. That's a whole another webinar. But fix your GL accounts. Look at your value at the end of your posting period. I'm just assuming your financial period is the same as the calendar. And just do a bulk adjustment, whether that's, if you can identify more specifically what it is, or at December 31st, just take a journal entry and move the value into inventory B if you can't sort it out. Obviously, if there's things that should be written off, you can write them down to expenses or COGS. There's a lot of details and discussion in there. It's not really a system discussion. It's more of an accounting, how to handle stuff discussion, and looking and doing your due diligence on where things went off. So if you look in the GL, you're going to see PU. PUs are AP invoices, and so that'll give you kind of like a place to start. But the thing is, the AP invoices could also legitimately be item type invoices, and those could be something that are actual transactions. So you have to kind of look through for service ones. So there's a couple different avenues to take. Again, if you can't determine what it is, I wouldn't worry too much, just adjust it at the end. But I would really recommend checking each week at least after you close your financial period and make sure that things stay aligned. If things don't stay aligned, jump right onto it and get right back in there and look for the specific transaction. It'll be a lot easier to identify when you do it that way. So I would put something in here like journal entry manual will reverse, something like that to note it. Obviously this is kind of easy, very straightforward. Let me check on my thing. I think that's basically it. So in summary, use a very simple tracking audit spreadsheet just to track your work. Start with your balance sheets and your audit reports. Run it for large chunks of time. So say just go to the end of the year. Does it align? Yes, you're good. Go to, if it obviously again, if it does align, you're not here for that. It won't align. Figure out, how far back you can go where it does align, and then work your way forward to see what period of time or what month it started the misalignment. Then work your way back to the week. Then work your way back to the day if you want to see what's there. And if it's all over the place, remember, don't worry too much. Break it down to a search of your general ledger and a check of your GL account determinations, whether that's item group or warehouse as well. Okay, and then if it's total chaos, figure out the end of your financial period and realign it. And keep in mind that if you need to do bulk adjustments, the tools already exist in SAP to do that. So do you need to do an inventory count? Do it properly, write off the SKUs properly. Do you need to do a write down of particular valuation on maybe larger valued items? Do an inventory revaluation. We can paste this in here, we can import it for you, but we need to know the SKUs that are affected to properly do it. We can't just go by, we need to write down by 20,000 on this inventory account. We need to know exactly why. Is there amortize it? Whatever the formula is, you need to figure that out. Do you need to receive some particular items? Do you need to issue out some scrap items that are no longer valued? You can do those all through the inventory transaction tools, and all of these tools properly reflect in the inventory audit report to keep your balance sheet squeaky clean and matching, so you can always produce a SKU and cost list.
Hey Mike, I've got a question here. I've got a little question here from Melina. She says, is there any way to see if accounts payable invoice in the inventory account ledger is service or item type without going into every individual invoice? Good question.
That's a great question. Off the top of my head, I'd say no. But it's quite a simple query. Like we can basically just, if you know the time period where it went off, like let's just sort this out here. If you know the time period where it went off, I can go queries. I already know it's OPCH. Then I go where doc type equals S and T doc date between X and Y dates. And this will produce a very quick list, like literally with, you watch me write it. This is exactly what you'd use, execute this, and you would have a list between those two periods of time of service type posted OPCH. We could go even further than that. We could do a custom, if it's common for you, we could even detect if the OPCH, I've toyed with making a fully functional inventory audit report auditing query. I haven't got to it yet, but this would be a good place to start. Otherwise, isolating it down to the specific week or isolating it down to the specific day will also save you a lot of time, because then you can just filter it for that particular time range, and then you don't have to go through every single one. So that's my best recommendation.
I have another question here from Martin. If time permits, could you quickly cover the inventory counting module best practices for doing the year-end inventory count?
No, that's way too much. It's just too much. I mean, I have a guide.
What version is Martin on? Because maybe it's in one of the...
I have a whole SAP document on that, not only best practices of single count, group count, and how to do it. I mean, effectively, there's too many variables to really go over it. I mean, it's a full webinar itself. You know,
I'm going to take it down in that case, because that would be a good topic to cover for the new ones that are going to be starting in January.
Yeah. It's hard to believe we haven't done that one yet. So that's a great idea.
No, absolutely.
And Martin, if you reach out to Tracy or just paste your email in the chat box, I'll send you the SAP guide for inventory counting. It's a good one on the new. Hopefully, you're not pre 9.0. If you're pre 9.0, it's different. But if you're 9.1, 9.0, 9.1, 9.2, 9.3, then it uses this methodology. It's just too much to go through right now. There's quite a bit in there.
Well, Mike, if you could send me the best practices manual that you say that you have, and also you said that you had another guide. Was that the same guide?
That's the one. Yeah, I have.
Okay.
Yeah, it's. Anyway, I'll send it to you, and anybody else that wants it, just ask.
Send it to me, and if anybody wants the recording of this and wants to revise this again, it will be available on our YouTube page at the beginning of the week. But let me know, and I'll make sure I send you the link. Are there any other questions? There we go. The how-to.
So this has like some nice business.
Martin.
Okay, awesome. So this has some like business discussion on how to do it, best practice. This is exactly what you're looking for. And then at the end, it has actually like how to import it into SAP too. So
super. So Melina, same thing to you, because I've got some messages here of people asking me for the guide. Just send me an email, Tracy@Forgestic, and I'll share it with you as soon as Mike sends it to me. And Are there any other questions? Good. All right, everybody. Well, thanks, Mike. And I'll see everybody in 2 weeks. Our next webinar is on the 22nd. We're covering SAP HANA Studio, creating queries with HANA. Some people are just interested in HANA and want to start looking into it. So that'll be our topic on the 22nd. So thanks again, Mike. And good weekend, everybody. Okay, bye.
Yep. Bye.